On US President Donald Trump lashing out at Fed Chair Jerome Powell overnight, saying he expected him to be a cheap money chair and complaining about rising interest rates. As you can see, Geoff Wood from Morphic Asset Management joins us now to talk a little bit more about the issues, I suppose, surrounding the White House and the Fed. I mean, we talked, Geoff, thanks very much for your time this afternoon, about, the risk, one of the central risks to global markets being the unpredictability, if you like, of the White House. Before we get to that, are we in glass houses? Should we be throwing stones, considering what's going on in Canberra at the moment?
You mean, should we in Australia be throwing stones, given we look pretty good with respect to what's going on in the US?
Do we look good, though, considering, we're potentially going to see another Prime Minister role? I mean, you're seeing markets sell off locally here to the tune of over 1%, biggest intraday fall in 1 month. I mean, there's a fair degree of instability here, let alone focusing what's happening in the US.
Yeah, I mean, generally speaking, the rule of thumb is politics tend not to have a large impact on markets, and I still think Australia falls into that bracket. I mean, one of the reasons Trump has had such a large impact is he's made significant fiscal stimulus pushes through tax cuts. Now he's getting involved in global tariff wars. The sort of areas that the politicians here are debating over just aren't on that scale, and I think markets will actually largely look through it.
In terms of then there's, as you've outlined, some pro sort of market policies from the president. I mean, to the point where he now is seeing that as perhaps being under threat from monetary policy, and the fact that a lot of the fiscal policy is the reason, the cause of perhaps seeing interest rates moving higher.
Absolutely. I mean, that's what's ironic. In the US, you've got an economy that's at full employment. So if you stimulate it fiscally, which Trump is doing in what is late cycle, it ultimately will be pushing on those cost pressures, and the Fed have to respond, given it's their mandate basically to control both for employment and inflation. So the irony is, the harder he pushes, then the more the Fed have to hike, just by the definition of their mandate.
Is there a genuine fear that any sort of political pressure could in fact impact policy from the Fed, or is there still a strong belief that there is a real separation there?
Well, I think if we compare it to the tariff debate, Trump ultimately around that did have the power of mandate just to enact certain tariffs just on his viewpoint alone. He didn't have to put it through the Senate or House. Now, when it comes to the Fed, it would be unprecedented for him to fire the head of the Fed and elect someone else. But actually, that too is within his mandate. But it'd have to come up with, the clause is, he'd have to come up with cause as to why to do it. And it's hard to justify it on the grounds that the Fed are ultimately hiking because of their mandate to sort of stop the inflationary pressure. So I think it is different to the tariff debate. It will naturally cause some fears. But I think for now it's just more a war of words. And if you think about the situation Trump's in, if things do start to go wrong with the economy and it starts to slow down, or later down the line we go into a recession, he's actually setting up the perfect fall guy here, and he can turn around and point at the Fed and say, look, those were the guys that were hiking, they're the ones that have pushed us into a recession.
No, that's a good point. And I suppose surely he would be aware of the potential ramifications in markets, global markets, not just US markets, should there be any strengthening or I suppose justification for a questioning of the independence of the Fed. I mean, that would send a massive shock through markets.
It's true, yeah. I mean, I think one place you'd see it in particular is the dollar.
Yeah.
I mean, if there was a view that the central bank was becoming another arm of the Trump administration, you would have dollar selling in quite significant size by a lot of the big sovereign wealth holders, for example, and anyone that's using it as a long-term wealth store.
And we saw a little bit of weakness in terms of the US dollar overnight off the back of these comments from Donald Trump around the Fed, but you're still seeing a stronger, in general, US dollar, and the impact that's having on global markets. You guys, have looked at emerging markets, specific ones, as opposed to perhaps the ones under an awful lot of pressure. What have you made on the rise of the US dollar and the subsequent ructions it's sending through EMs?
Yeah, I mean, if you look at a lot of the emerging markets, stock markets, without taking the FX into account, they're very resilient, actually. I mean, this isn't like the 2015 sell-off in emerging markets where local stock markets were down and the currency was weaker, so you had a double whammy. What we're seeing at the moment is it's mainly just a US dollar story. So things like the H shares, the Chinese stocks listed out of Hong Kong, they're actually only down about 5% from where they were a couple of months ago. But it's those currencies around sort of Brazil, South Africa. It's the currency story really that investors need to focus on, not the local stock story.
And so would those people with the subsequent risk appetite, be advised to look at some of the stronger, more resilient emerging markets that may have been or may be sold off, along with those probably more with their own unique acute vulnerabilities?
I think that's a good point. It makes sense. I mean, you always see this knee-jerk reaction where things like Turkey are grabbing the headlines, and there is that reaction for people to sort of lighten up the risk across the board, and that creates buying opportunities.
Does India fit that bill?
I mean, the Indian stock market is doing fantastically. It's broken out to new highs. That's an economy and a backdrop, and we think there's a lot of stocks there that we like. It's an area where we've been invested in really since the Modi government in 2014, and we continue to like it. So the risk there again is the currency. So we're long the stocks, and we've hedged out the FX. So we're just focusing on the area that we like.
Geoff, we've got to leave it there. Appreciate you joining us. Thank you.
Thanks a lot.